you're a passive income investor and you want to invest in Tesla stock, but you know Tesla does not pay dividends, but you want to have exposure to Tesla. So now there's an option. You can do that with one stock ETF. And I've talked on this channel, I've talked about two type of Tesla max yield ETFs or one stock ETF. And this is one, it comes from Purpose investment group, and the other one came from YieldMax, right, which is a title investment group. These are the two ETF that I've talked on this channel extensively. I went to deep dive, and but then you might be confused and you have money but you want to buy only one of these. So which one should you buy? So on this video, if you stick around, you're gonna know which is the best for you to invest your money. Why? We're gonna go through risk, we're gonna go through dividend structure, we're gonna go through cost structure, and in the end I'm going to let you know which one of these will be the best for your situation to invest your money. So, and if it's your first time, just make sure you subscribe on my channel, and if you like the content, just make sure you hit the thumb up, you like it, because on this channel I always talk about this type of passive income ETF, and there's always changes, so you need to be you need to be updated. And the best place to get the update is to from this channel, and to be able to receive those updates, you have to make sure that you subscribe. So let's start. And so these are the two YieldMax Tesla option income strategy. And YieldMax, it's a brand name, and it's provided by a Title. Title is a company out of New York. When it comes to this one, is the Tesla Yield Share Purpose ETF, which is Purpose Investment Group, which is the company out of Toronto. So those are two different things. One is American company, the other one is Canadian company. But they all have the commonality. They all invest in one company, which is a Tesla, which is also American company. So now we look at the overview of these two. The first one you can see here, the yield here is a 67.30 and pay distribution monthly. When we look at this one here, the distribution is only 17.5, but also it pays monthly. When we look at management, how much you're going to pay, we look at the exchange first. This one primarily exchange is traded on New York Stock Exchange, while this one is traded on Toronto Stock Exchange. So those are the two different things. When we look at the distribution, of course, this one also is monthly. It's currency hedged because it's traded on Canadian currency, so they hedge your currency, against the fluctuation of the dollar, which is US dollar versus Canadian dollar, because the underlying stock is the Tesla. So when we look at asset under management, this one is about 30 million right now, and this one is about 15 million. So this is more bigger, and this is more a little bit smaller, but you can know the difference. Of course, this is American, which is more the 10 times the population of Canadian. So so the difference there. But when it comes to management fee, we can see this one is about management fee here is only 4.40, where this one is about 99.99, so about 1%. This is about 0.5%. If you look at the whole management expense ratio, if you add to this one, it will be about maybe 165. It will be almost closer to 85. So when it comes to fee, I would say they're pretty much almost close the same in general, but this is a little bit more cheaper. The ticker symbol, where if you want to buy, when you want to put it on your computer, this will be YTSL, where this one is be TSLY. There's a difference, and this will be on US currency, US dollar. This will be on Canadian dollars. When it comes to let's go to a portfolio breakdown. When we come to holdings, right, we can see holdings, it's top 10 holdings. Of course, this one, because the structure of this ETF is synthetic, meaning they hold a lot of US Treasury bonds, because they use that money as a collateral with a third party, or we call counterparts. So they use counterparts to hold the money, and then they write calls, um, mimicking the Tesla performance, but they actually do not hold Tesla itself. They're not buying and selling Tesla itself. It's just synthetic, doing call options, and that's why they generate that a lot of money. But you can see most of their most percentage of the 40% is about 50%, and 50% is all about United States Treasury, Treasury. So short-term bond and long-term bond, and with different maturity. When it comes to this one here, the difference between this company actually that do own Tesla itself, so they buy Tesla, and they take the money, they buy Tesla stocks, and then they write call on half percentage of position. So if they have, let's say, 1 million share, they would only write call on 500,000 shares, versus the actual shares. And whatever they gain, whatever, if they have to give up their shares, you're gonna lose the 50% of share gain, and of course, if you lose, also you're going to lose half position, meaning it's more when it comes to risk management. This Tesla here, the Canadian Tesla, it's more solid, and it's more because it doesn't have the synthetic mechanism to it, so it's more safer when it comes to investing. When you look at the performance, both of them actually they haven't been around for a long time, so we can't really know the actual performance, but we look at the distribution here. This one, of course, is paid a lot of, it's 60, 67, about 80, 82. Last one was the last one was the payable date is going to be on 17th, which is today's 11th, and that will only be about 82 cents. When it comes to this one, the last payment pay date would be 10th, which is yesterday they paid, and it was only about 30 cents. But we look at the amounts since they've been paying. This was 30, 67, 30. So there hasn't been a change on dividends since they paid the first time. Well, this one, they have a little fluctuation from 99, but not that much, from 99, almost $1 to 90, 90, and now it came down a little bit lower, 82. So there's more fluctuation when it comes to dividends because because it's a high dividend, and also there's more of risk involving this one, because you have synthetically writing calls, where this one you actually hold the shares themselves. So you have also, not only you have the gain from the call, but also you have the exposure to the stock itself, and also growth if the stock performs well, right? So that's it. When it comes to performances, we said there is no. We only have year to date total distribution is 30. That's it. There's no chart, because according to Canadian Commission Exchange, they don't allow to display performance on this one until after inception. A year after inception, when we come to this one here, we can see the Tesla from New York Stock Exchange since has returned about 3%. We know Tesla hasn't performed well, so pretty much when you invest in this one for now is just dividends, because the Tesla hasn't performed well. But we look at 3 months was 40, and was about this one was 40. If we expand more, we would see, look at this one, 3 months about 40%. 40%. That's a total return including the dividends and stuff. So it's 40%. We look at since inception is about 3%. 3% versus S&P 500. So this one has beaten the S&P 500 since inception about 4 months ago. What else? When we come to, yeah, so that's the main thing I want to make sure, because I made a video on this too, and there was maybe confusion which one is which. So that's what it is. When it comes to portfolio breakdown, this is something I want to tell. Look at this one here. It's only one stock, right? Because the underlying equity is only one. Of course, is Tesla, and the primary function of both of them, investment objective is to make sure they write calls to make sure they get you as highest dividend it is. But the approach, there's a two different approach. One, write call using synthetic way, I've mentioned that before, and the other one writes call by buying stocks and write call on them, call option. If you want to know more about call option. You can, there's so many videos about that, but you can do by yourself, by the way, but it's just easier to use ETF, I believe, in my opinion. But yeah, so that's it. So which one should you invest? So I would say you are a Canadian investor who is seeking to buy one of these ETF to make that passive income. I would say when you buy this one here, first of all, you have to buy with the US currency. So if you have US dollar in your account, then you can buy this one easily. But then you have to exchange your money, right? So that's the thing you have to consider. But if you're an American person, then I mean, it makes sense just to buy this one because it is, of course, in US exchange. Though some exchange, of course, will allow you to buy the Canadian as well. But here in Canada, we can buy all stocks from the US stock exchange easily. So that's it. That's the thing. And then the other thing you have to consider, if your primary objective is to get the highest yield as possible, I think of TSLY is your thing. It's your ETF because it has the biggest yield. But we've seen on the history of dividend, it fluctuates more than this one it is. But if your concern is more about risk and you want to preserve your money as much as you can, I do believe, is my 100% belief based on the based on the of course the structure of these two, this is more safer. They pretty much have the same. Here they display management fee, but management fee doesn't include all the expenses. So when you put expenses, this will be a little bit lower, this will be more higher, and that's it. When it comes to asset under management, this is more, has about 30, double of this one. But we can also see demographically, of course, US stock has more population, it would have more assets, it would have more people investing in this one, which is 30,000, and this is 15 million, 30 million, and this is 15 million. But end of the day, they're all still small when it comes to fund, but they've been around only within 4 months, so they're pretty it's pretty good so far. And when it comes to inception, when this thing came around, they both just came around just recently, about 4 months ago. So there you have it. If you have any question, or what do you think it's the best for you to invest your money, just leave a comment below, and don't forget to subscribe. To meet again. Bye bye.